What is going on, guys? Welcome back to another stock trading video. It's Wilson. In this video, I'll be talking about the top stock breakout patterns that anybody can study and start to identify. We always want to trade breakouts because those are the ones that will profit us the most. But how do we identify them? Well, there are a lot of different patterns, and in this video, I'll go over the top ones. So let's start off with the parabolic intraday breakout. That's the first one that I'll be going over. This is a pattern that usually goes through two or more continuation or consolidation patterns to complete the trend and the way that the stock is moving. Most people like to go in panic mode after the first pullback, but this is more of like a consolidation and is a sign for a second breakout. Of course, you have to watch it closely in case it drops below that massive pullback that you can see right here. So a good entry point for me after a little bit of consolidation, this could be through the course of 1 or 2 days, is I like to get in before the breakout occurs. And how do I identify that? I use the moving average. So the moving average, once it trades above the moving average, I like to get in as an entry point. And if the stock just goes up a little bit, I can take my profits. If it goes up a little bit and consolidates, and then it starts going downwards below the moving average, then I like to sell and cut my losses early. Um, but there's always a chance with these type of breakout patterns that after it goes up and spikes up a little bit with the volume kicking in, it will push the stock up and this will form a breakout. Now what happens when it gets to this top part right here, this triangle area, is that people start to short sell, they see the volume going up, people are taking their profits, and the price stock will drop. Remember, what goes up comes down and it goes back up, and that's how the stock market performs. So as soon as it goes down, what happens is I like to do a partial sell. So I like to sell half of my stocks and take the profit first. So if it continues to go down below this part, then I can just cut my losses and sell. But there's always a chance that it will consolidate a little bit again and then it'll go for the second breakout, as you can see up there. Another thing you can do is that, let's say you're more of a safer player, you enter right here and it goes up to about right here and you sell, then it goes through this place right here, and as soon as it trades right near the moving average line for the second breakout, you can enter again. So there's potentially two entry points. You can do it at the bottom before the breakout, or if you didn't catch the stock, it wasn't on your watch list and you just heard it from a call out, this is another entry point right here for the second breakout. The second pattern that I'll be going over is the bull flag. This is probably one of the most common one, and you hear this everywhere. People always talk about, oh, it's a bull flag. It looks like it's forming a bull flag, and it's one of my most favorite ones. So usually what happens is that there's a slight breakout or upward trend, and then it consolidates. It always consolidates. When it consolidates, the volume drops. People aren't really selling, they're not really buying, so there's a little bit back and forth, and after consolidation the second breakout comes in. You will probably see this out of like 3 out of 5 stocks that you trade on a daily basis. Usually is after a stock spikes from pre-market, and then there's a pullback, then it goes for the breakout, and then it consolidates for the next couple hours, and those are usually a downtime where the volume is trading lower. And then once it gets near the moving average line, I like to get in and go for the second breakout. The number 3 is the ascending triangle. It's another common stock breakout pattern that you usually don't hear as much as the bull flag, but you do hear this a lot, and a lot of times you wonder, what is it? Well, you want to try and catch this ascending triangle on one of the slight pullbacks. So this is a pattern that's a little bit harder to trade compared to the first two that I mentioned. But what you want to do is that you want to look for these pullback and consolidations after the upward trend, and you try to get in for the spike for the stock to continue. Usually, when you're day trading or doing intraday trading, this happens a lot with a stock that has really good news and it just continues to go. I like to see stocks that are like this because I like to see the little pullbacks and I like to see the consolidation, and then it continues to push upward. But as you can tell, there's always a higher support for every one of these. So here was the first dip, second dip, third dip, and you can tell it's on the upward trend with this green line right here. So even this little minor dip right here, towards the breakout upward pattern is another higher support. So with this in mind, you know that on this third one right here, you know you can get in and it will push upward. If it does go down, cut your losses. So this is the ascending triangle. Now, the next one that I'll be going over is the rounded bottom. This is more of a slower breakout pattern, but swing traders and like long-term mortgage traders love to look at these charts. They study different types of stocks every single day and they look for these type of patterns because these are the stocks that are usually more stable and it's usually more of a stock that has like a slowly recovering process, usually after like a bad news hit them or the sector just decided to do bad. Like yesterday, all the movie and theater stocks dropped. This is a good pattern to start to identify as it slowly recovers back up because you know this is a good company, you know it's in a good sector, but it just dropped down because of some sort of news or the earnings didn't do well enough. But you know that the stock will eventually go back to where it is. You know, a lot of swing traders like to take advantage of this. For example, you see this a lot with the leverage ETFs. It forms like a little U shape. You see this a lot with like a lot of the popular stocks such as like AMD, where there's a lot of trending upward and downward patterns. And you see this with like Snapchat. You know, that's another stock that you see this often, like Twitter. These are the more stable stocks, but it slowly recovers over the course of this could be like 3 days to like 2 weeks. But what you want to do is that as soon as it goes above the moving average, remember we're all about moving average right here. Um, you know that is time for a possible breakout. Now, if you're more of a safer person and you're waiting for the stock to kind of just jump back up past resistance, you can always wait until the second entry point right here. And remember, it's always a higher support, and is above the moving average line. So when the volume starts to kick in, as you see the volume on the bottom, the green part right here starts to spike up, then you know that there are a lot of buyers and the price will go up. And this could result from just a recovering stock, or it could be because of a news catalyst or some sort of massive spike in volume, a technical breakout, or something like that. That's why it's very important that you're looking at the moving averages as well as the volume and identifying a good entry point. The next one is the flat base breakout. A flat base breakout is basically an overextended flag, is how I like to say it. It is more of a neutral range on a lower volume. So there are stocks that tend to do really well. One that I can think about off the top of my head is FENG, which is that Chinese stock, the media company. And what it does is that there was a while back, like a couple of weeks back, there was a breakout, and then it's been trading sideways. Basically, volume hasn't been strong for the last week or so, and it just goes up and down within like 10 cents range, right? So usually when you see that it keeps trying to test these new resistance points, you know it's going to eventually try and break out. So as long as the support line keeps going higher and is testing new highs on the resistance points, it's a good entry. So you wait a little bit. So the reason you can technically you can swing the stock from the very beginning right here and just hold it all the way until the breakout, but that's not the way I like to trade. When I swing trade, I like to just hold it for no more than a week, usually a couple of days max. So what I would like to do is, and the reason I actually do that is because I don't like that it holds up my capital, and I like to invest in stocks that are growing a lot quicker. So usually I would want to add this type of stock onto my watch list, and the more it consolidates and it pushes and tries to test a newer high, I know that it will eventually go for the push to a newer high, and that usually comes with a good company, you know, like with good fundamentals and stuff like that. Remember, technical analysis is one thing, but you have to combine it with fundamentals as well. So when it goes up towards very close and trades above the moving average, and it tests a new high, like right here, I like to think of this as an entry point. I usually like to kick in at this top point right here because I see it's breaking out a new high from this sideways pattern that has been trading. So this is the flat base breakout, and you have to know that when it gets all the way up around here, you should take your profits or at least do a partial sell, because it could be very likely that it will drop back down. It might not drop back down to this part where it started to do sideways, but it could drop back down and have a pullback, and so you want to sell here, and then when it does have the pullback, you can always buy in again and go for the next breakout as the stock continues to improve its volume and improves its stability. The next one is the measured move breakout. This is probably one of those that aren't as common and not as mentioned as much, but it's one of the most beautiful and predictable patterns. I mean, I love it. I love it. And this is usually on a stock that just runs and runs and runs. Like HMMY is a perfect example. It just doesn't stop, and this can occur over the course of like 3 to 4 days, possibly a week, and the momentum just goes for a new high every single day. So consolidation, consolidation, and a breakout, consolidation, consolidation, breakout, consolidation, breakout, breakout, breakout. So it always trades above the moving average line, and each time it consolidates, as you can tell from the bottom, the volume drops a little bit. But from here, as a trader, there are so many different entry points that you can pick. You don't have to necessarily do this first one. A lot of times I don't trade the first consolidation on the breakout because what happens is that you don't know the stock well enough, right? So this could be like a second day thing, or it could be where the stock just continues to run. And it's very important that as a trader, you identify a good entry point that you feel that is less risky and that you want to get into. So I like to probably do the second one right here. And if I missed it, I can go for the third one. But if I see two in a row and it's still spiking upwards, I know the third one is a confident one that I will go into, because anytime there's a breakout, upward trend, and then there's consolidation, chances are that if it's a running stock and there's volume in it, it will continue to push higher for a new high, new high, new high. And as always, there's always a higher support, as you can tell, and a higher resistance. So this is always a good pattern to trade. So here are some more tips. Make sure on your free time or on your downtime on the weekends, study charts and look at the previous stock that have breakouts. Type in these big names like Snapchat, like JNUG, these ETFs, and study it like you guys, see the trends on how it moves and try to identify these type of breakouts. Take notes on the breakouts, take notes on the charts, and think to yourself, what is the best entry point for me, and where do I want to take my profits if I was in position for this trade? The more you learn, the more you practice, and the more you look at charts, the more experience it becomes. And then consider a partial sell strategy on breakouts. So each time when it's on its way up, sell. And then you can always buy back in later. Remember, it's never too late. So on the pullbacks or on the dips, buy in and push for that consolidation and wait for the next breakout. And another tip is that always trade with volume. Make sure the stock has volume. Unless it's always pulling sideways, you have to make sure that there's enough volume to push it to the next level. And always build a strong watch list. Some of the best traders I know have over like 50 stocks on their watch list, and they set freaking alerts all the time, and making sure that sometime, like for example, Bob, the person I interviewed, you can watch it in my other video. He said he sets alerts past like 100 something days, and you never know when that alert will kick in for you to do a buy. So as a trader, you have to always be aware of every little thing, and be aware of the moving averages. It's something that you should take a look at as well. So anyways, thanks for watching. If you found this video helpful, give it a thumbs up and subscribe to this channel. You can always follow me on Twitter at itswilson8.